All right. Hello, everybody, and welcome to the stream. Today is a big one because, of course, we'll be looking at everything to do with the markets around the world, and it's going to be a big session. I'm looking forward to it. I hope you all are as well. And it's going to be a big week because we have earnings. We've got the kind of big tech, as in out of the way now, but now we have the small tech coming through, and it's all about to happen. So make sure to stick around for the next hour. We'll be going through everything to do with the S&P 500, stock market, commodities, gold, and of course, everything else. Let's give a bit of a shout out to the people that are joining us here right now. Of course, we get quite a few people here. We've got Michael, we've got Lambo, we've got Big Silver, we've got Kevin and Michelle and Swiss and everybody else joining us, including Dr. Horton. It's good to see you all guys again. Make sure to also give it a thumbs up if you want to, because I think this is our first technical live stream for the public for the year. So it's been a little while since we've done this one. So make sure to live, give it a thumbs up, and that will help us out. So as I mentioned, we'll cover the US 500 today because we approached 5,000 last week. We got so close to that magical number, and that's a huge zone and really a level that I think we've all been looking at for a long time. We probably suspected we might not get there so quickly, but we did. And now we find ourselves at a point where, can this market continue forward in terms of, getting past the 5,000 level? Today, we'll talk about whether that's historically probable and also whether we've seen that before many times because, of course, we haven't really seen the round number for a little period. 4,000 was the last time we hit, 5,000 is this time. So I think that's a good place for us to start and to look at the futures market of how it's traded in the past. Because really, the S&P 500 around a big psychological number like this is a pretty big deal. And it's a big deal. Sound's cutting out? Really? Okay. Still cutting, man? Even Tom Lee thinks there'll be a dip. Yeah, if Tom Lee's thinking there's going to be a dip, then that'll be a pretty big deal. I don't think it should be cutting out. We should be all right. Let's go over to the weekly though and have a look at these markets because of course 5,000 was a big level, and we see that round here. And then of course we get to the next thing, which is 4,000 and everything around there. So 5,000 big zone, 4,000 big zone, 3,000 big zone. How many have we seen before? Most of you have seen a few. Let's do a quick raise of hands. Have you been trading the S&P 500 before it hits 2,000? Before it hit 2,000, were you trading the S&P 500? Yes or no? Sounds good. Perfect. Wish I bought an Nvidia when Nancy Pelosi did, says Slay at Home Dad. That would have been pretty crazy. In his last interview on Friday, Tom Lee mentioned the dip, didn't mention the dip again. Oh, he didn't. Okay, the dip's over. Thank you very much, Parmesan. Appreciate it. Says, hey, I'm a fan of you, FX. Greatly appreciate all you do in the trading community. Can't say enough good things about you and your channel. Thanks very much, man. Appreciate that. Yeah, that's sneaky Tom Lee. All right, so I think when did I get into trading? So let's have a look here. So technically it had already hit the level before, but you could, then we don't go back far enough. But let's say 2007 would have been when I first really got into this type of game. Then from that point, obviously, we've seen some pretty big milestones. Now, why I want to kind of talk about these rounds is just to have a look here at the levels. So just remember, 2000, we hit close to it the first time. We then go down. Then we go back up, and we get right onto that 2000. You can see here, 1984-ish, and then around 2000 flat. We find resistance, and we sell off. That was the first time we hit 2000 after, of course, the global financial crisis. Then we have 3,000, which was a pretty historical one because we hit it close to it a few times. We got close to 2940 and then saw a massive collapse back in 18. Then we saw 2957, saw a sell, and then we hit almost just around 3,000, tapped it, and saw a sell again. And then, of course, we have 4,000, which is the level most of you would have seen when you've been trading, which ended up being around here. And what happened was we just got 3960, sold off pretty heavily. 39.86 sold off for about a week or so and then rallied through. So basically round numbers, you can probably see a bit of the history. The history has been we've sold generally, we've sold generally, we've sold generally. Now it's question mark. And that's because it's a psychological level. And Wall Street's usually going to be taking off some profits around these types of zones. So I think you probably see what I'm talking about this week. It's a very hard one. If you asked anybody what's the trend, well, everybody's going to say the trend's up, man. And it certainly is. I mean, the trend is clearly up. And it's been up for quite some time. So that's a pretty big line. And we know that if we're going on the bullish side of things, then you've got to always say, well, the market's to the bull side. It's been like that for a while. We've only seen really one major pullback, which wasn't even that major, which was from 4,800 to 46 kind of 50 zone. So really, could we stop here? And how many bits of evidence? Because of course, we always want to be using evidence. We want to be using data. We want to be using a statistical approach to markets to figure out what to do next. Some questions are coming in here, and it looks like a few people are saying that there's a question here from AJ saying, hey, Tom, last year you mentioned the Fed pivot and the effect on the market afterwards. If the Fed does cut rates in May, shouldn't we expect a sustained decline / bear market? Yes, so there's two schools of thought there. There's obviously a lot of times where the Fed is cutting. And we need to remember that the central banks of the world, do not cut out of the goodness of their heart. Instead, of course, they're doing it because they are seeing, weakness in the economy, and therefore there's a problem out there. So the central banks are not cutting out of the goodness of their heart. Instead, they're actually cutting because something's wrong. So if that happens and we don't get growth in stocks, then the fundamentals aren't coming with it either. Then usually we do decline. So there's two schools of thought, and a lot of it has to do with the way it acts coming out of that initial decision. So you actually have a cross between bullish scenarios that have happened in the past and bearish scenarios that have happened in the past. And yes, there are more bearish scenarios than bullish scenarios, but you could still see the market actually going up afterwards. But the way it trades over that next month will be very telling to how the market is going to usually get out of it. If it sells and keeps selling, that's usually not a great sign. But obviously, if it buys, then we've got some good market analysis that says that maybe we're going into what we call a deflationary boom. One last all-time high before the correction, says Sorav. Okay. And biggest bear Mike Wilson got demoted recently. Maybe a single the top is in. Is that true? He did not. Really? Thrashing Mad PL says, is that true? Really? He got demoted. Oh, no. I can't believe it. This comment here. Beating coming in at 3:30 a.m. Cali time. Wow. You are keen. I like it. All right, let's go through some market stuff. So first up, 5,000, big level, psychological zone number one. Now, if you load any chart, and you could pretty much load a daily, a 2 hour, or anything, you're going to find that most people are talking about divergences. Now, generally speaking, I don't do it because, of course, if you put in RSI, relative strength index, for example, you're going to get divergence every time in this situation. Obviously, you've seen a melting style high. You've got this big reaction, which is really, really quick. And you can see here that the divergence is coming through across the board. So really, that's showing us that we have a market weakness, sure, but it's not really that statistical relevant, generally speaking. Now, in this case, considering the all-time high, considering the way the market's been rallying, considering everything else, you might find that the data actually does suggest that the next 1 to kind of like, let's say 4 weeks is going to be a bit all up and down and all around. In fact, the suggestion is, and I'll put this in the next video, so make sure to stick around for it, that only 30-something% of the time markets actually sustain growth over the next 2 weeks. So that's an interesting point as well. And I just wanted to bring it up because people are talking about divergences. You'll notice on our channel, we don't talk about it much together, do we? Because really, it doesn't give us that much advantage most of the time because the trend is up. Therefore, you should be in the squeeze. But in this case, we do have a divergence that's very particular, and we've got quite a lot of reads in the past where we've seen that movement. Let's see what people say about the stuff with Mark Wilson. So it looks like February is on average one of the worst months of the year. Yes, absolutely. We share that, Luke, in all of our data. So obviously, the way it looks like here, it's true about Wilson. My goodness, can't believe it. So we get we get the rally, and then we usually get a fall that goes into March, and then generally an April kind of rally again. So you've probably seen one of these play out before. A notable one that didn't work was probably 2021 definitely did. 2022 rallied at the back of March, I think. I think that's how it played. And 23 didn't. It had a pullback in March because, of course, we had the banking crisis. So, yeah, generally, if you're going to see weakness, you see it in the first quarter. I've been talking a little bit about that on the channel, or a lot about that. So here we are, traditionally, somewhere in here. Traditionally, about the 15th of Feb is the statistic which you usually see the fall off. I would say that in pre-election years, you often do see it in the second week, which is kind of where we are right now. So if it's going to fall, it does make statistical sense. At least that's something we've seen before. And usually it's pretty sustained. So that means that it goes for somewhere between weeks into even a month. And I think that's important when you consider this, because a normal pullback in the market, you're going to be looking at the market and saying, okay, well, if there is a normal pullback here, how long is it going to last for? Well, when at least you have some information about how long it should technically last for, that can help you out. Also, I want to give a quick reminder. Thank you very much to everyone that's joined us here for our first public stream of the year. Make sure to give it a thumbs up if you do enjoy this type of content, to let me know. And it does help out as well on YouTube to get people to be able to see it. All right, less rate cuts. Gold will go down, says Human Hilton. We'll look at gold very, very soon. Tom says, I think your analysis of 500 and then up seems counterintuitive, but probably correct. So when you say my analysis of 500, Tom, 5,000 and then up, it means it's probably, I don't know what you mean by that, but okay. Let me know in the chat. I'll read it off. 2023 gainer. Which EV will lead today? Fisker, Rivian, Polestar, Tesla, Lucid, or another? Maybe we'll look at a few of those for you soon. Gold flip-flopping around. Can't make up its mind. Correct. It's just underneath or around that kind of most traded price. And AJ says, if Tesla hits 170, would anyone else feel this is a good buy? Look for a gap fill at 207. Okay, well, let's put AJ's question to the room. What do you guys think in the chat? Is Tesla a good buy at 165 to 170? What do you think? Let us know. There we go, Ken. Ken's filling out the information here. There you go. That's how you get the purple monkey dishwasher, Ken. Kevin says, people are expecting way too much when it comes to interest rates cuts. Yeah, probably. Wilson did step down from part of his position. He still runs the US equities. Well, there you go. Maybe he just didn't want too much power in terms of too much stress in his life. Dollar spike indicated indicative of weak stocks. So Peter brings up a good question. So, okay, let's look at the key levels. First up, key level, I think 4,900. A lot of options here, a lot of gamma switches that will happen here. Also, we need to be looking at the daily 20 because we mentioned CTAs. And what CTAs are is, of course, a fairly important aspect of what is overbought in this market. So if we do end up getting underneath the 20, which is sitting probably around 4,880, 4,900 by the end of all of this going through, then if we do sell through that zone, remember that's probably a trigger. So I think for a lot of swing traders, they're going to start getting excited about any type of short if it does come in, and that would be around that 20 moving average. Obviously, at the moment, it's bouncing off the 20 very effectively, depending on whether you're using an SMA or a EMA, and this is the kind of zone that you're looking at. So S&P 500 rolling through that 20 at the moment, showing us every type of divergence under the sun, hitting about 5K or very close to, so it's technically a bit of resistance. 4,900 being a big switch trend on the small time frames, and that 4,850 we mentioned a few weeks ago being an important zone, which we've already seen it now react to. So, of course, we knew it was already important. We've then seen it react to that. This will be, I think, a swing that should give us mean reversion. And, of course, if that's happening sometime in Feb, it makes sense to the seasonality we've been discussing. Let's now talk dollar index because it all is connected. Dollar index at 104. So we looked for dollar index to 103.80 to 104 for, okay, it took a while. I'll be real. I think I started really talking about it pretty heavily somewhere around in here. So we're talking a month straight. We've basically been looking for the dollar index to hit this level, and it finally did. Did anyone trade dollar index or some kind of proxy like a euro based on the concept of getting this thing to 104? Still not mid Feb. Looks bullish to me. It is bullish, San Diego. There's no change yet, man. We're just going close to that psychological level. If you are going to go and try to trigger shorts or anything, you've got to think about your instrument choice as well. You know, I mentioned this quite a lot. You know, I think it's very important that you understand that futures trading in particular, unless you're really sure of a change, you're going to get whipped a lot by stop loss hunts. So you've got to really pick your instrument. Thank you, Joe Mama, 7777. What worries me is watching the markets, but oil is grinding lower. Yeah, again, we'll talk about oil very, very soon. There's a lot of weird macro things going on. There's weakness here, but there's strength in the jobs numbers. But then January is always fairly strong. So maybe the economists are just getting their hopes up about the rates. There's so many intricate parts here, very interesting components of what you traditionally see. And then there's some really big counterintuitive things to why the markets are rallying on some very strange information. And what I mean by that is things like oil. So you're right. Market will blow past 500 SPY. Okay, cool. 145 on the Tesla question before. Or a few people saying Tesla is good. Some people saying no, Tesla is just trending down, man. No good there. 48.60 before we go to 5,000. All right. Thank you very much. Appreciate it, Hilton. Thank you very much for that as well. What do you think about small caps? Can they hit an all-time high? They can, but the problem with, let's say, the Russell IWM flat is that it has a lot of regional banks in it. And I think regional banks really are going to continue struggling through this decade. So let's just quickly finish on the dollar here. So the dollar's coming in at 104. This is the supply over on this left-hand side. So that's the supply. Very important you understand your supply and demands and positionals this year. I think it's very, very good trading levels, especially for day traders and swing traders. Now, if we breach through this zone, you can see I've got a little alert above it. I could see the dollar actually spiking, maybe hitting like a 105.50. And if that happens, you've got to think that's going to be a catalyst for markets down. So a lot of people are thinking about this and they're probably not seeing it. I shouldn't have drawn it because I was going to ask you guys. Can anyone guess the pattern? Anyone get to guess the general pattern that you might be seeing here on the on the dollar index? I've ruined it. Tom says last week you suggested there is a possibility of a 5,000 instead of falling further push up. Yeah, so that would be a pierce of 5,000 with a strong closeout on the weekly and then a really decent blow off top. So that would be that scenario. Because you got to think about when, just because you come up with an idea, let's say it's chess, and you come up with an idea, doesn't mean you're going to play that idea. So you've got to realize that in trading, a lot of the time, what you're doing is you're coming up with scenarios and scenarios in which you believe you're going to have some form of edge. So for an example, if I was thinking, when did I have edge? At this point here, I felt like I had edge towards here to here. Did it take a little bit longer than I would have expected? Sure. Yes, it did. Sometimes that's going to happen. But did it do it? Yes. Now, you might realize recently on oil, we were talking about 78 a barrel. Did it do it? Yes. Did we know that was a big, strong level? Yes. If it had breached 78 a barrel, do I think it will go to 82 to 84 a barrel? Yes. So there are certain times that you're going to have edge that you believe is a statistical advantage. It's your job as a trader or even an investor to be able to recognize when you're seeing something that you're going to have edge on or that you're going to have some kind of you believe is fundamentally undervalued. Because, of course, an investor is looking for that. So a lot of you would have said invest head and shoulders. You would have been correct. Left shoulder, head, right shoulder. Maybe what we'll do in some of these live streams is we'll do a guess the pattern. We'll see how many of you get it right. We'll do some TA guessing stuff and see whether you're correct. Now, the interesting thing about this is the price. So if you go through kind of like the break of the line, it actually predicts a new high. So it predicts the dollar back to some crazy number like 107. Now, I don't think that'll happen. The only kind of miniature prediction I'd do is if we breach this level, we'd probably go into this 106, 105, 80 zone. But yeah, very important zone, very important chart. No doubt the dollar index is going to come up a few times this week. Let's move over to oil because you are correct. Oil is very, very important, generally speaking, to health of economies. And if you're not really sure about why that could be, and of course, you don't want super high oil either, but we do want oil to generally be a little bit stronger. It's because when you think about it, back over here, we went into this really bad period for oil. And that was the 14, 16 kind of period. Now, the US economy or the US actual stock markets still did okay over that period of time, but it kind of went sidewaysy. Now, we can actually overlay that, but a lot of markets around the world, such as the Australian market, such as the FTSE, the UK market, they really suffered over that period of time. And that's because we saw a slowdown in obviously the Chinese economy and demand. So it could be that that's what we're seeing here. It's not so much weakness across all of the world. It's just more of a weakness across some of the developing nations and obviously China in particular. But I'm not really too concerned about oil getting crushed until it gets through that 65, 67, 50, because we know this is a big level. And as it comes down here, buyers are going to be looking for demand. I'll be watching though to see big trades, because if big trades come through here and we do get a breach down, it could get really wild really quickly. So oil certainly worth watching as well. Let's move to gold. So gold's a pretty bit interesting one here. Now, with gold, we have to be looking at the most traded zone. So you can see we're just underneath it and it keeps failing at the same level, 2055. So you'll notice that we've gone into this supply, we've found resistance, Gold can breach that zone. Gold bug should rejoice. I would say we'll take that high out, being 2075. The move from here to here should be relatively stable. And then if we do get through there, then we're really rocking it. But we'll only be rocking it if yields come down. I think if yields continue their little spiking up, that's not going to be good for gold itself. Damon says, is it profitable to just trade indices or better trading stocks? For trading only, not investments. Same for options. Look, they've both got good times. Usually it actually comes down to the VIX. So I put this in my advanced masterclass and I talk about the VIX. And I know that at the moment it looks like the VIX is half broken, but there are the VIX indicators. Yeah. So you could use VIX, you could use VIX 1D, VIXI, whatever. So not VIXI, VIX, VVIX. So what you're generally looking for is you're looking for periods of time. So in periods of stability, I think it's better to trade generally stocks. Okay. In periods of stability, more options, more opportunities, more signals, more replication. But in periods of really high vol, in particular, you really can see some particularly great trades in indices. Now, obviously, indices are also a great swing trading device as well. But look, stocks come with a complexity. With an index, you kind of know that it's got a pretty damn good value and it's probably going to recover in the future at some point. So there's a certain level of stability there just mentally in the back, even though you're usually trading really small time frames. But I think they're all pretty good. I wouldn't say one's necessarily better than others, but I do think that in periods of stability, stocks become very, very cool to do. Big Silver Hot Dogs is starting to get very excited about Chinese stocks. Yeah, fair enough. I mean, capitulation brings out the excitement. I definitely think that, today, look at this pre-market, 3.11% on the CQQQ. I mean, this thing got absolutely mauled. K-Web, CQQQ, they're all in capitulation, in my opinion. They've come off, they've come down to the supports, they've wiped everybody out, unfortunately. That comes with the parcel, of course, of this style of trying to buy the dip, if you are, because this is BTD right now. There's no rip, there's no V, there's no rip, there's no anything at this stage. So it's a pretty important level. Obviously not exactly where you want to be, guys. It's not for the faint of heart. You need to know what you're doing. But yes, I don't know if it's a stock picking market. This one, this is a classic example. Actually, explains that really great question about indices. Sometimes it's better to buy the indices, especially in collapsing markets, because you might say, "Well, I know which markets, which stocks will come back," and look, it might be that you only buy big tech. Historically, you've been pretty correct over 15 years, but in this market, maybe it's not big tech, maybe it's something else. Obviously, it's CQQ that I'm looking at, but it could be a different market sector that does better. So, yeah, I think indices can be really good in times of uncertainty as well. PP says, Tom, I have 100 shares of Meta, average price 160. Nice, bro. I want to sell a covered call. Which is the best? 500 out of the money, 475 at the money, 400 in the money, deep in the money. My expiry is the 15th of March. I am happy to let go. Well, obviously, if you're talking about which one's going to give you the most premium, it's going to be at the money, isn't it? Because that's it. Options are kind of scaled like this. Now, I'm not going to tell you what to do exactly, but you just need to think about it. So, like one standard deviation, generally your premium is going to sit in here, yeah. And then you've got your 2 standard deviations away. And these are good questions. Let me know in the chat, by the way, if you want me to answer these questions for people or just talk about stock levels. But this is a good one because at the money, obviously, is going to pay you the best. In the money's obviously not really going to pay you any premium, not much premium anyway, because you're basically selling it in the money. So you're going to get a little bit of premium on top, but generally you're just kind of going, well, I want to lock in a bit of profit as well, because remember, you're going to most likely get executed on that position. So I don't know if in the money is really going to be the best play for you. At the money is definitely the one that generally, if I was looking at it, I like the most, or out of the money, which would be above. But look, in the money it's more just because you're not sure about the level or you think it could drop heavily. I would think about the pricing structure and what you're really trying to achieve. Like in the, let's say this is the question. You sell it at the money and it's 475. Ask yourself, how would you feel if it was at 550 at the end and you received $10 or 20 or whatever you might receive? So if you receive $20 and it's at 550, you may not be very happy. Now, if it was at 400 and you only received $20 and therefore you're down from the current level $75, so you'd be worse off by a lot, would that make you really sad? And at that point, once you start to understand that, you start to think about scaling and all of these questions. So I think you've got to consider your scaling concepts as well. Rob Al says escalation in the Middle East and oil goes down. Yeah, but whoever said that was, see, that's our primed, that's like a narrative that we get fed, that we believe that oil should always go up because of conflict. But it's not always true, is it? And we're finding that out. And obviously, I think we've done a very good job on the channel of really talking about that. Specifically, our oil picks together have been quite good here. OG Gary says, and here's his concept here. And he says, OG Gary, I only go out of the money when I have edge or some sort of confluence. Good point. And confidence that a certain level will get hit. When my portfolio is up, I love learning about trading and financials, says Jungle Bob. What happens when your portfolio is down, Jungle Bob? What happens then? is that when, like many other people, Jungle Bob, you get under the desk and you go, oh my goodness, what's going on? I don't know what's happening. That's when you get the shakes. You have to drink some coffee. Chinese education stocks in Nasdaq are holding on too well. Any idea what's driving Edu Tal higher? Not really. So I'll just have a look at Edu because I know that's been a fairly popular stock in times. Wow, look at it get destroyed. Ooh, that is quite horrendous. Wow. So that stock dropped 97% of its value. But not anymore, guys. That would have been a pretty sweet pick, wouldn't it? Now that is ultimate capitulation. And the thing is, the way it ends is so weird. It just kind of stops and sits there. That is so strange. A strange stock. I mean, I guess the way it bottoms is pretty normal, but yeah, that is weird. No, I don't know what it's doing. Nor do I necessarily trust it when it does that type of drop in it. Tal missed earnings, according to Kyle J. Kevin says the bottom is when the CCP buys. That is true. Do you think Barber earnings on the 5th, on the February 7th will move China markets? I think they will certainly be a possible catalyst. So there are two things that could be big catalysts. Kevin says it straight away, I think, which is a pretty big one here, which is the possibility of the CCP, underpinning, but they've already underpinned a few times, but they need to start buying their own market again, which they did. And they actually did that back in 16. And a lot of people don't really know necessarily how big a deal that was. In 16, we went on an epic bubble run, and I mean an epic bubble run, and it was huge across the Shanghai Composite if you put it in. But you can kind of see it here depicted by Barber. But then Barber held on; most of the stocks got destroyed. So the whole index was up, around 200%. It was pretty wild, 150 or something, or maybe 170. All right, so here's Barber, and you can see I've already got an alert on it, which is sitting at around this price of $78. And $78 is a pretty big deal for it. If we manage to breach through that, I think that we're getting through the 20 moving average. We're getting some nice signs of recovery around where we've seen previous lows. And while I'm not a big fan of this stock myself, I think it could be the catalyst, or at least one of those chances of catalyst. Jungle Bob says Nvidia $1,000 calls. Whoa, that's pretty high. It's already traded. Look, the thing about Nvidia is it was cheap at one point. Now, you might see this chart and you might say, when was it cheap, supposedly, Tom? Well, actually, in here, it traded underneath its average. And you might say, how's that possible? It was already so expensive. It was trading underneath. Now it's trading a standard deviation, so one SD above its average trade. And it already trades on a very high multiple. So you're talking like a 45 multiple. So if you're trading at 45x, you're trading one standard deviation too high. Then this is a very expensive stock right now, but it is up 2.9 in market. It's obviously, in my opinion, starting to get a little bit wild. These are not normal candles. They are large candles. And while I'd ride the train as long as you need to ride the train, if you're on it, and descale when you feel like it, we haven't got any signs of weakness yet. We haven't got a collapse candle. We don't have any signs of weakness. The trend is just up. As I say, the trend is your friend until the very end in this case, I guess. But 600 would have been a pretty good descale, I thought, at the time. But as an investor, hey, you're just riding that thing. Is it too late to buy Nvidia, Meta, and Amazon? Oh, different stocks. Nvidia at these prices, well, I just said it's one standard deviation too high. So from a fundamental perspective, I believe there are cheaper prices on the horizon, or at least pullbacks in time. Okay. That's my opinion. But let's see what the opinion is of the room. Let's see what everybody thinks. Chuck it in the chat, guys. We've got 600 people here. Give it a thumbs up if you're enjoying the content so far. Let's see what you think. Is Nvidia cheap, yes or no, right now? 2-year time horizon. 2-year time horizon. Cheap, yes or no? Let's go. Kyle J says, stay out of Nvidia's way. Big Silver Hot Dog says, Nvidia is overpriced big time. Michelle says, can we check cat? No, people are saying. Okay. All right. That doesn't mean it won't go another $100 though. Just remember that, because what you're in right now is almost a hyperbolic market. You've got markets that are moving at a perspective. So this is a $1.63 trillion company. We have a 12% candle, and we have in 4 weeks 35%. So we've basically added on, what is that? $400 billion. Meta added on 200 billion in a day. Some pretty wild numbers that could be shed off the market fairly quickly. Slay at home, Dad. Definitely Interesting concept. Depends when the AI bubble will blow up. Yep, I've seen more vertical than this. I've seen more vertical than this. Absolutely. You can get some serious ones. Just go and have a look at some of the weed stocks from a few years ago. Look at the 3D printers from a few years ago. Look at AI from a few years ago. Like you can actually see it in Nvidia's charts a few times. There's been pretty big rallies followed by big sells. And while that doesn't look the same, because of course these aren't as big evaluations, it's all relative. They all do the same types of things. All right. So the next question was Amazon and Meta. So Meta actually, even with a 20% up, is still trading around 5-year average multiples. So funnily enough, is it cheap? No. Is it expensive? No. Based on fundamentals, expect just by themselves, you would say no, they're not. It's not ironically that expensive. Amazon's another one that's interesting. It's still trading at a decent price. Remember, it's from 2020's price still. I'm not sure it's like the greatest stock at this price. I probably wouldn't buy it myself, but it probably is the cheapest in terms of fundamental metrics. Nvidia's up 3% pre-market. Yeah. Look, this is the type of thing that you'll see. You come back and look at Nvidia. We haven't seen a sign yet, but I'll put it in the report. I'll put it in our daily video when I see signs of it looking really bad. Let's take a look at Microsoft here. Another one of my favorite stocks. Is my favorite stock. Obviously rallying up in recent times, but again, just pretty disconnected from a lot of the stuff we've seen. All right, let's move over to some other stuff. So the question before was the US 2K. Can the US 2K make a new high? That's a good point. Can it do so? Yet. So the US 2K is an interesting one because, of course, I can see both a bullish kind of level and a bearish kind of level here. And I do think it's trapped within that kind of range. Now, if we breach up, well, I think we're going to new highs for at least the last period of time. If we breach down, then we could be looking all the way back to 1860 and obviously seeing other markets try to mean revert. So I'm not super won over by the US 2K. I think one of the things that you got to remember is when you're trading an index, and look, I was huge on this last year. December, November, I crapped on about it the whole time. And historically, it actually usually beats, I think it beats the S&P into the end of January, generally. Okay. And I think as a raw percentage, it did it pretty damn quickly. It was absolutely caning it from November. We broke through this trend line. We absolutely rocketed. So there were some big moves on the Russell, but the problem with the Russell is it's a lot. I think it's like 20 something percent regional banks. So if you go over here and you put like a US 1K in or 1,000 growth or something, not US 1K, like 1,000 growth, you'll find a bunch of different funds that are in here, and a lot of those will be the types of funds that you're looking at. There's a whole bunch of codes, so you can use this one here, VONG, and you might notice that there's a total difference. In fact, it's already made a new high. So there's a difference between the Russell 2K and then the growth components of the Russell, which actually have been doing quite nicely. So I think that's very important to really delineate when you're talking about markets. And this Russell 1K growth is actually quite good. We really need small caps to move upwards. Sure, but I do think that a lot of small caps have been. The quality small caps have been. Let's go through a couple of small caps here that I think are interesting. First up, SE. Traditionally been pretty bad for a long time. This is obviously kind of the Amazon of Asia. And you can see it certainly hasn't played catch up. Have some some pretty funny advertisements, but yeah. Now I think that could be a Wyckoff low bottom, and we've seen very consistent kind of volume, and obviously we're seeing lows. We talked about this. I guess we haven't talked about it in the public room for a while, but we have been speaking about it recently, and it looks like a pretty good kind of level and a fairly good technical breach to the upside. So again, just a stock that is going to be volatile. Don't get me wrong. There's going to be 10%, 15% moves. but it does look like it's kind of starting to turn the corner. And it's not the only one. There's big stocks like Hershey's that has really been suffering. I mean, you probably don't think that Hershey's is down from $275 all the way down to 180, which is a substantial drop for it. And then you can see here, a lot of you would recognize that as a potential inverse head and shoulders or a bottoming style pattern. So there's a lot of these things. Someone mentioned Rivian before. Now, this thing doesn't have that type of stuff. We did like Rivian once, which was over here, and it rallied up and it hit that big TP supply zone and then just mauled back down. So I'm not a huge fan of that type of stock. Let's have a look at the Tesla just to see whether there's opportunity in Tesla. I think this stock is going to go down further. And I don't know whether it's going to go like this and then this, but that's okay. If it does so, I think there'll be edge, or whether it's going to come down to the 165, 170. But the trend is down still on Tesla for now. And although I could see why people would sell credit in this kind of area to receive the sweet fat premiums that you would have been getting thanks to the increased volatility, it's just, I would say, hovering around this zone for a little while. What do you guys think? Do you think Tesla is going to rebound heavily right now, or do you think it's going down further? Let us know in the chat. The other problem with Tesla is going to be that it doesn't seem to have the elastic demand it once did. So in previous times when it dropped like this, you would usually see fairly strong buying and it would buoy back up very quickly. And it just hasn't really had that beauty in it for a while now, ever since really 2022. But you haven't had those like big drops followed by brutal like big pickups, and big drop over here by big pickups. And it's just been a long time since it's had that type of trading on it. So I feel like it is losing a little bit. Tesla is going down. Is it too late to short Tesla? Yeah, I would never short it. Yeah. I mean, you could as a day trader in certain zones, but I don't. Look, the easy money on the short was made. If you were going to short it, you would have had to have had a pick on it at this heavily traded zone that I've had there for ages. If you're going to short it, that would have been the zone. The other area you could have looked at doing it was in here, just before it kind of rallied through. But yeah, once that changed trend in here, that was probably the short. And again, who cares? It's just Tesla. There are so many stocks out there. You probably never looked at a Hershey chart before just then, but now we've looked at one. There are so many stocks and so many opportunities. Remember, if you love or even have an opinion on something, it's probably not a good thing to trade. Do I trade Microsoft? No. Why? Because I just think every day is a great day for it. Doesn't mean it's a good day. It's probably bad, but yeah, it's not a great trade for me. Let's go through some other markets. So we've got treasuries here dropping off. Obviously, we've got high yield junk bonds holding firm. We did have that combo that we spoke about on the channel. So that was this one here. Oh, no, it wasn't this one. It was IEI / HYG. And that, of course, was yields. So we were seeing a defensive style move of the market since January 30th. And the other thing that we've seen recently has been, other defensive markets such as staples and stuff having some of their better days. So do remember, of the markets right now, we have multitudes of defensive stocks over the last 5 days performing just as well as some of the big growth stocks, not the usual type of thing. Kyle says, Tom, what's the best way to find quality stocks to trade? Oh, that's a pretty big question. I would say do the advanced masterclass. Look, there are free ways and there are expensive ways. And I find that it's a mixture of a few different things. I'll give you a hint. It's good to search for volume initially as a hint. Rob L says no heavy rebound while Tesla keeps cutting prices and eroding the margins. And no Tesla Model 2, I guess. The hype behind it has died off. Yeah, I kind of agree with that. Welcome to the almost 700 people joining us. Very much appreciated you joining us, considering I didn't really make a big announcement about this. And it's our first stream back of the year that's public. So yeah, welcome and thank you for joining us here. The whole auto industry is finally correcting price-wise. So Tesla is going to have a hard run. They are also going to retool for the new Model Y. There you go. All right, let's talk about some earnings stocks. Let's go earnings whisper. This week, we got asked a question before about Caterpillar, Palantir, obviously, at the close, McDonald's today. Let's talk these big earnings. Then we'll go through a couple of other big ones, including Enphase, and maybe even look at Chipotle. This was okay. It was okay, guys. I think Chipotle would do okay in Australia, actually. But my goodness, I was when I was in Vegas, I walked off the strip and I went to this Mexican place, and it was really good. I just said to the guy, I said, "What are you eating, man?" He goes, "You want my food?" I said, "I don't want your food. I just want to know what you're eating." He goes, "All right, man, I'll make it for you." And he gave me like 7 hot sauces. It was awesome. Very good. All right. That was better than Chipotle, but I don't know what it was called. Otherwise, I'd give him a shout out. Caterpillar, Palantir, McDonald's. All right, let's check it out. First up, let's do Mackie D's. Now, if I was basing this on Australian consumers, I would say Mackie D's is going up because Australians are wild. Now, I'm actually interested to the American viewers out there and actual viewers around the world. Put this in. Have they introduced an application, like the app in America or the app in other countries? Have they started giving you surprisingly good, weird discounts and reward systems and timers and percentages off and stuff? Something that I've never seen them do before. So I feel like it's having an effect. And I think that in Australia, you know, people, they love McDonald's. I mean, they love it. Any Australians out here? You would attest. They're on every corner. It's like being invaded by McDonald's. I have no idea why. All right. Anyway, the stock itself, interesting. We've got a high, we've got a new high, we've got a new high. We've got 3 highs. It's obviously slowed. You can see that there is a case for obviously distribution and a case for an accumulation. Let's take a look at the weekly here while we get those answers in. And you'll notice that we have a fairly strong market. So it's obviously, you know, still making some nice big greens, but it's just all about that earnings, because if it breaches up, then next up, you know, we're going through 300, we could be going 320 plus. We know this is a big resistance point. This is always where you find yourself into big earnings, generally a big key level. And I mean, for sellers though, if it gets under that 286, you're going to want to be selling it in general from a technical level. All right, so Burger King over McDonald's. I haven't eaten McDonald's in over 10 years, says Josh. Yes, in Sweden, says Oscar. Tesla should be a lot higher. Okay. Getting boned my den, says Kenny. Okay. There always has here in Australia. What? An app? I don't think a good app. People here are smart. They don't eat the McDonald's. McDonald's missed on earnings? What? McDonald's Q4 adjusted earnings revenue climb. Oh, well, it's already out. First sales miss in nearly 4 years. Slow international business. Not Australia. Someone's going to go cross-check that now. All right. So it missed, but did it miss by much? It sounds like. I'm not going to really bother reading the report. The market's obviously doing it for us, and it's figured out that it's happy to trade at about the same rate. So at this stage, it likes itself. Now, again, still, if it breaches out, it's going to keep going. You would think, because of course we'll get this slow, methodical system, and then of course the downside would be there. Now let's look at another one, a bit more interesting than McDonald's, although I do find that to be usually a pretty good defensive. Palantir. Now this is an interesting one. It's had a good time recently, coming off $7, doubling up, plus a bit, getting up here. Not an easy technical. Anyone got any opinion on this? I don't have much, because I do think that this was a great level for take profit. I mentioned that a bazillion times. Obviously, it is trading underneath, and it has traded a little bit higher. The rally, if it would come through and this stock does well, could be to $26. So the upside I could see is 26 longer term. The downside, obviously, for today is probably going to be about the 1450. And at 1450, people are going to have to make a pretty tough decision, because, of course, that's going to be a dip defensive demand area. I think if you get a structural change here, then it could be a good zone. If it breaches through this $14 target, though, watch out down below because there was big trade here. I would say very bad things. So earnings obviously will make a big decision. Breach of maybe the high of 1826 could be a decent catalyst towards the buy. And obviously, I'd expect 1450 to hold it for now. PLTR implied vol is 14% for today's earnings. Yes. So you want to see your implied vol, and we have that here, which you can see is plus minus 12 plus. So yeah, probably into the 13s or even 14s. So very, very, very volatile. And you can see McDonald's had the plus minus 3. Well, certainly not doing that. Let's move over to CAT now, and then maybe we'll look at spot or CMG. Okay, let's have a look at we'll do CAT first. CAT's a pretty big, important one because it's going to show us a lot about the infrastructure kind of builds. Now, this is a big deal how well it's been doing. 327, CAT, I remember when CAT was trading. Geez, I remember back over here. Yeah, when were we? Oh, yeah, in this area, like somewhere around $55 or something. And didn't really do much for a long time. You can see it went 55, went up, came back down 16, 55, and now it's trading at 328. What a world. Very strong breakout. Looks pretty good on the charts. I couldn't go against it. Obviously, it looks like they've done okay on the earnings. Let's read the headlines. I will read them out to you. So let's check this out. We have headlines. Caterpillar rises after upbeat Q4 result on strong equipment demands. Caterpillar stock on track. Thank you, government, for buying stuff. Caterpillar stock on track for record high after earnings beat forecast, and Caterpillar adjusted earnings revenue rise. So pretty good. Another win in this case. PLTR is an arbitrage play on S&P 500 inclusion. Oh, that old chestnut. Yeah, I mean it's usually a buy the rumor for S&P 500 inclusion, but I don't think if it did get included, that would be a great day to still own it, generally speaking. All right, let's do another one. Let's do Spotify, a stock that's suffered a bit in recent times, but it's been recovering. So you can see here we went from 384 down all the way to 71, and then we've come back. I think it's at TP. So spot is, in my opinion, at that critical resistance. I don't like it here. That is my technical opinion of it. I don't like it. All right, now it's going to go do 20% just for fun. But yeah, I don't like that high. It looks pretty bad. CMG. What is it trading at now, dollar wise? Needs to do a stock split. 2506. Holy moly. 2506. Wowzers. You guys really like Chipotle in America. It's just wild how much this thing's worth. $68 billion. Woo. I don't know what to say about this chart. It's up. Looks like Monster Energy from years ago. Geez, Monster Energy suffering yet? Surely it should be. Monster Beverage. Okay, it's starting to suffer. Maybe they bought some of the other beverage companies. I don't know what they actually own. But what I can say is this is a crowded market. This gamer drinking, energy drinking trash. That is one crowded market. Does anyone even like Monster? CMG and Nvidia collab AI burritos with neuro links in their minds. Oh, I actually have a question for people. Would you allow, I'm just interested, let's say 10, 15 years time, would you allow a brain chip in your own brain? Yes or no? Doesn't, just a question. I'm just interested. A brain chip. I'm wondering how many people will come around to it or how many people hate it. I have to assume a lot of people would hate it. Okay, so we've got a couple of yeses. No, no, no. Okay. Jungle Bob is wild. Jungle Bob's everywhere. Oh my goodness. Brain chip. Okay, seems like the general consensus is no to the brain chip. Okay, here's the next question for you. It's kind of on an Elon topic. Would you go and live on Mars? Now that's a little bit less decisive. I think I'd rather go and live on Mars than get the brain chip. Maybe I'm being ridiculous. Maybe I'm being ridiculous. All right, let's look at a couple of other stocks. We've got Disney as well coming very soon, and Disney. A lot of people say it's go woke, go broke, but yeah, it's been moving up recently, and I've actually not minded the technical, especially around these levels. Now, I'd like to see it hit 101. Not a super interesting week for Disney, but 101 is going to be a big resistance for it at this point. Can I trade from Mars? Yes. Yes, you can. You'll be part of the Mars colony. All right, in phase. In phase is the next one here. $100, 35 cents. All right, this is a pretty big zone. You can see here I've got a 61.8 fib sitting around this area. Now, earnings will be all important for it, and that's going to be the biggest thing. But it is down to this very interesting level, and I've got some alerts set. You can see I've got an alert here for 95. Now, I'm more interested in this stock than anything in terms of the other ones we saw because we have a low being formed with some nasty looking candles. We're obviously getting close to that 95, where I could imagine people have stop losses. And I'm very interested to see how it reacts around here. Do we see a drop, then a rally? I think this one could be on the potential for the charts this week, especially into earnings. Now, I don't like predicting the earnings. I don't know which way it's going to go. Generally, if I was going to trade before earnings, I'd usually use an option and do some crediting system. But in this case, there's a lot of volatility into this. Let's have a look at how much volatility is expected because I'm sure it's there. But I like both ends and I'd like to see what happens here. What do you guys think? Is it an interesting stock to you? There's end phase not on this chart. Of course it's not. Ooh, Hershey's is this week. And then of course Baba. Roblox as well. Roblox, that's an interesting stock, RBLX. So yeah, with end phase, I'm really looking at those two levels I've got on the charts. Let's have a look at Roblox. Check that out. Very powerful stock recently. It's got back to that 46 a few times. Obviously, it's nowhere near the 140s or whatever the hell it once traded at. But this is a super, super move in terms of where we've seen it just get crunched between two zones. Now, I don't know if 25 billion seems like a lot still for this company, but anyway, a lot of people play it and it has a lot of microtransactions, I'm sure. So you got kind of this high level, you broke out, you've obviously weakened quite a lot. You're going to need to breach this level here, which is at $43. Quantum Indices Futures Traders. So it's first time here and it's fun. Welcome, Quantum. Thank you for joining us. Keep says, mate, do you look into shipping stocks? Red Sea, Antiques, and all. Zim and SBLK is looking strong. Check it out. We need to look. We'll look at Zim. I like everything, man. If you ask me, one of my favorite stocks of all time, it's a railroad company. And you're going to say, that's the worst, dude. Why are you like a railroad companies? Because if you actually look through history, I don't think they ever went down. They just kept going up and up and up. There's been some strong ones with a lot of back history in them. So Zim, this is a shipping services company. It's been getting absolutely mauled for quite a long time. Seen a lot of spike recently in it, which obviously is due to all of this news that we've been getting out. So that's been since December. The only problem I would have with this is, you hit resistance. So if you're in it early, maybe in this breakout here and you rallied it into here, that's really nice. But look at this chart. You've got kind of these lows here, you've got the highs. You've obviously seen a bit of a breach where it's dropped. You've got big volume coming through after that. This could be accumulation for a breakout soon. So you could go for a 16 plus alert. You could also go for an alert underneath. So if I was looking at a stock like this, I'd be saying, okay, how does it trade underneath a new low? So I'd set an alert for a low, see how it trades, and I'd set an alert for a high. Because until you see the hallmarks of something that you can replicate, you're really just saying, is it accumulation or is it some type of distribution? And that's because what this is it's a pullback in time at the moment, which is something you'll hear me mention a lot throughout 2024. And that's because I think a lot of people are incorrectly think about pullbacks in markets. They think you have to pull back all the way down. Instead, you can also waste time, and wasting time is kind of like the price restructuring itself. Thanks very much, Quantum. Appreciate that. Thank you very much for watching. And also just a shout out for everyone that has been watching, giving it a like and everything. Yes, I know sometimes I use a little bit of clickbait, but in general, I think we you know what to present. If you've been watching the videos, you know what we present. We'll obviously bring very similar content. We're trying to bring the data, the stats. And if I have a stat like I had on the weekend, which was obviously only 2 times in history have we seen or in the last since 50, 60 years, have we seen anything like what we saw last week, which was 1 stock goes up, 2 stocks were going down. So 1 up, 2 down. I mean, what the? Very weird. Not usual. Hey, Oz. You want to have a look at Crocs? All right, let's do Crocs. Now, Crocs, I've had some nice action on this year. And obviously, I liked Crocs around here because I've got a little alert that I've had set there. And I've also been looking for Crocs to potentially do more, and that is move forward. Now, I don't really have any affiliate of why I think Crocs is strong or anything in terms of, from a fundamental side. But from a technical side, I think this is a pretty good base level. I like to see it react this way. Obviously, a very strong, upbeat kind of earnings, I think, report was coming or something, or maybe it was some, I think it was that. Hasn't had a fantastic last week. So we actually traded lower into that. So you can see here we found the resistance, which is the initial resistance, and we traded lower. A break of 105, I believe, will go into like a 130 kind of run. So I think that's going to be a pretty big deal for Crocs from a technical perspective. And I am looking at a positive side on this stock. So we've got some positive stocks, we've got some negative ones. This one, though, I like it around those 80s, and it's been doing quite well. Kevin says ASX must be a lot like the TSX in Canada, a lot of commodity exposure. Yeah, so if you look at the FTSE, the UK 100, you look at the Australian 200, and then you look at the TSX, they all trade pretty similarly. They're kind of what you would call boomer indices. They're boomer indices. And why are they boomer indices? Because we have financials, commodities, oil, energy, metals, that kind of thing. James says the Zweig market thrust indicator stat was good, predicted the rally October, November. Yeah, that's a great stat. I love that one. That's definitely one of the top indicators that you can ever use. Very good rally thrust. We had actually quite a lot of rally thrust. That was very, very nice there. And it was a good turnaround. But I mean, you didn't even need that. When you saw that technical, a lot of people, obviously I don't read all the comments, but I read a few of them. People get pretty crazy on it. But we got to remember, back in October of last year, we hit a very good level for the S&P. We actually hit into a 17 low forward PE, which is one of my favorite kind of levels. Plus, of course, we also had the technical zones. Plus, we then got the thrust indicator. So it makes sense why we're here in some ways. But in terms of whether we're going to get, a rally through 5K, it's possible. The market's up, so you don't want to really fight against it. But based on the history of the last 3 times we've hit around round numbers, we've generally seen sells around this number or just before. So that is the way. Let's do PLTR. We did just before, sir. We like the 1450 if it gets smacked. What can we expect from copper? All right, let's finish off here with a couple of last ones. Thank you again for everyone that's been watching. 395 for copper was a big technical zone. So this has been a zone that I think is a huge deal for it. 395.4. We've been unable to breach it. We've come back down, which is showing again the weakness that we're seeing in US oil as well, which in copper terms is really showing us that there's a weakness in China that for some reason the market already priced, but at the same time it's going down. Horrible last week candle, a huge level to set an alert for just in case. I don't know it's going to do this. If you had to ask me what I think's going on right now, I'd say I think it's weak. But I'd love for it to breach that level because I think that would be quite a good momentum area. Is DAX also the boomer? Yeah, different. DAX has slightly different companies. I always suggest if you're ever going to trade an ETF, look up ETF, whatever the ETF fact sheet is. So just search whatever the ETF is plus fact sheet, and then you can use that. When TLT breaks, there will be blood, says Graham Stevens. I don't think TLT will break. And you mean break up, or you mean break in general? TLT is, I believe, the US Treasuries is totally safe in terms of over the long term of the next 5-10 years. I'm not really too concerned about it. Obviously, it's down today because we've got yields up, which is surprising that the market therefore can even hold up. But hey, what do you do? And we'll finish actually on yields because we'll look at that in a second. But yeah, Treasuries, I still like this level. I've obviously liked the 93, 94. We rallied up. We saw some kind of weird seller, rallied for another day and then fell. So yeah, once we get through 100, we're going to the 110s. I would say that I'm positive on it. I think this is still possible. I think this is possible. But 110 is my eventual target on this. Michael says, wrong, TLT is going to crash. Treasuries crashing. Didn't they already crash? Isn't that what that is? It's a crash. Now, if you're talking about some kind of flash, it is possible. It is possible, but I still think it would recover. It's because when you think about it, you're basically leveraging the biggest economy in the world, and you're also, leveraging the major. And in history, everyone's been pretty efficient at doing that for quite some time. I think the US could almost print like $40-50 trillion and get away with it, even though that sounds insane. Because Japan's been doing it for a while. And so did the Dutch and so did the British. They printed a hell of a lot of their own money. All right, let's look at the yields. Anyway, it's just an interesting concept. You again have to have a confidence in whatever you're doing. So, Druckenmiller, one of my favorite traders and investors of all time, he says that when he first got into the business, not from his mentor, he heard this: bulls make money, bears make money, and pigs get slaughtered. And he's here to say that he was a pig, and he believes that only by being a pig can you make money that is superior than the index return. And what he's saying is you have to think a little bit outside the box and be able to recognize certain things. That's why we do technical analysis a lot of the time that other people can't see. So if you were to say to somebody, okay, last week, non-farm payrolls, it's going to come in 350,000. We expect 170,000. Chat, everyone out there, 750 of you right now. What would your initial response be to do to the market? Okay. We expect 170. We know that everyone wants rate cuts. What would you honestly think? Would you honestly think that with the 350 number, we're going up or down? You'd think short, yeah? You generally would. Of course you'd think short. Now, what'd the market do? Initially went, ooh, oh, sucker. I mean, it's a massive, nasty fake. And it's typical of non-farms to do that. But that's just a small time frame concept. Of course, right now, you could ask a lot of people, oh, what do you think of China stocks? If they've bought one China stock over the last year and a half, they'll say, no way. Whereas if you have no emotional attachment to it, you might be saying, it's interesting. But it could have looked interesting over 2.5 years ago as well. You'll notice I only started rabbiting on about it really recently. And then, of course, September, October last year, I also was talking a little bit about it. because I haven't really believed in it. I usually like to let them settle for about 18 months. Yeah. All right. US 2 year, big weekly close, big level. Obviously, a breach out of this will probably cause panic in the market. It's just the nature of things at the moment. And yields have had a negative correlation to the market in general. Levels you want to be setting 4.5 will be a big zone. So I'll set an alert here just so we have it. We will be watching it at 4.5. And we also want the 10 year just to be able to see how it's trading. And you can see it's bounced really heavily off that zone. Not past 4.2 yet, but yeah, I think the 2 year is the one you should be watching this week. So definitely check that out. Bad means good, good means bad equals short. Yeah, when good means good, usually that's a good sign that the markets are actually in reality. So I guess you could say that that was Friday, but unfortunately, there's a lot of good news that also is turning bad as well in terms of moving the market down. Now, the other question was PayPal, and I want to do that as well. Why is Nvidia running and the rest of the market is stagnant? Nvidia is blowing. So yeah, you just need to look at a chart and you'll see why. Weekly chart, 4 weeks, 30 something percent. $400 billion stacked. One standard deviation now away from 5 year average pricing. So it's not cheap anymore, even by 5 year averaging, which here it was. But he said he was a pig and made money. Yeah, because he's thinking outside the box. So what I'm saying by the non-farms is that outside the box, you would say, okay, big jobs number should go down. He would say, what would make the most amount of money for the market to do? Because the general consensus with a number like that is going to be negative. So maybe I would go positive, and then he would think of, that's a very basic scenario. What I'm saying is he's thinking of scenarios where he's really critically having a thought process of, okay, how do we find value or find the start of a trend that's going to be significant that I can make significant money out of? And that's a lot of the time being patient. Remember, Buffett has a famous quote: the market is a great tool from transferring money from the impatient to the patient. That's part of the reason why we have patience, react, don't predict, because in general, the reason I think that you can be successful in the markets is that when you're patient, you wait for your edge, whatever that might be, whether it's something like a day trading masterclass or our advanced masterclass, or something you've been learning and you've predicted and you've started to make a replicable system. That's what you want to be doing there. All right, let's have a look at PayPal. Hopefully that makes some sense. It's just the beginning, but you want to be starting to think about those types of things. All right, so PayPal is down 62.40. Obviously, it is a stock that we've been talking about. I've liked it around this level, anywhere from 57 into the 62s. So I'm not going to say I don't like it here. I think from a technical level, we've got a weekly breach out a few weeks ago, which happened on the 16th of Jan. So although everyone hates this stock, and rightfully so, it's been pretty bad, these are the first signs, in my opinion, of strength. And of course, if the market does do this, I'll be even more feeling it. So I don't want to see a new low on PayPal though. That would not be so good. So in general, I'd like to see it strengthen around here. I have absolutely no opinion on whether the company's good or not. I barely use it nowadays compared to where I used to use it. But it's also trading at $62.40, which is a lot cheaper than it was at 300 and something bucks. So yeah, interesting turn, interesting switch out on the weekly. Decent wicks. I'd like to see this thing, find some recovery around these levels. And in terms of when we're going to find out the real pain for this company, we are looking at the Wednesday, the 7th. So it's only a few days away, and we'll find out how it's going. 24 should be shaky. 25 may roar, then fall. Sven Henrik. I tend to agree with him, but I think even 25 would roar. 26 might even be wild, and then something weird will happen. Not good. Alaric says, appreciate insight. I'm a fool for shorting Nvidia at 575. I think it's not so, no, you're not a fool. I'm sorry to highlight your comment, but I just think it's a learning experience for everyone. You've you've correctly probably analyzed that it's overpriced. It is. By many metrics it is. The problem is that, remember, there's that kind of concept that markets can stay irrational longer than you can remain solvent. And there were people that knew the tech bust was going to sell off, and they tried selling it for 2 or 3 years. And they sold and sold and sold. And just as they went bust and had to close their position, about 2 months later, it sold off and got absolutely destroyed. Now, that would have been soul crushing to me as a trader. But what you're trying to do is you're trying to predict. You're trying to say the end of the trend's coming now, and I'm going to profit from that. If you do such a thing, you need to pick the instrument selection. And the instrument selection in general, guys, anyone in the chat want to help out Alaric here? And again, it's not picking fun. I've done it too, man. We all have here. If people in the chat say they haven't done it, they're liars. Who's done it? Who's done it? Everybody. Everyone's done it. We've all got involved in a bit of shorty short with some prediction, or a bit of long BTD, and then it just keeps dipping. That guy that bought Virgin Galactic at $40, oh, he got owned. We've all done it, dude. We've shorted levels. The important thing is you don't let the short get out of control, or you don't get the long get out of control if you leveraged it. And really, it's the leverage amount. So, yeah, is 575 insane? No, it's not insane to have a go at trying to short it there. I can understand why you might have been trying to. But I always have a rule that if you've got a trend like this and it's vertical, we should only really consider options, because at least then you can fix your risk. Okay, fix risk. Remember, even a futures contract, it could gap above you and hurt you. But the other thing is, this is a huge rally. So, this is becoming irrational. Inarguably, people might be calling it a bubble at some point soon. I could see an AI bubble discussion becoming a thing. Now, if that becomes a thing, believe me, it'll probably still go higher, even when it becomes a bubble. But it reminds me a lot of, that 2021. And we all know how it ended. It went rally and rally and rally and rally and rally and smoked everyone that was trying to go against it, and then got crushed. And those stocks fell off 80%. So this is a quality stock. It does deserve to be valued at a nice price. I just think that probably it's valuing itself a little bit highly. And that's because you can see these big candles here. But hopefully you're not too hurt by the overall risk. All right, guys. I keep buying Enphase, says S. Brown, and it's not going too hot earnings today. Well, hopefully it works out for you, S. Brown. But yeah, Enphase is at that very interesting level for sure. Nvidia is a train. Don't step in front of it. It's one of those big diesel trains that run you over. It is a big one. Dollar index is still pumping at 104.3. I missed that. 104.3. Oh, 104.16. Yep. So not quite nearing 104.3, but obviously different futures. This is futures. You're probably trading the spot area. Thoughts on Mara? Always the same thing there, guys. I'm not a big fan of those Mara things. Let's do a quick crypto check to finish off. Old Bitcoin. How are we going here? Boring coin, as we call it sometimes. It's still trading around. It actually looks kind of bullish. Again, look at it's sitting with a higher, low style scenario. It does need to breach 44. If it breaches 44, I could see it at 47 fairly quickly, 46 to 47. This is the area we've seen shorters come in before, which is 43.5. So just be careful out there, guys. But at this stage, Bitcoin is certainly still in that shorter term, medium term uptrend, and short term, we've got a sell that's kind of setting up around here. So I'd like to see it, if I was a shorter, get rejected pretty quickly. Excellent, Quantum. Thank you very much for joining us. Thank you, everybody, for joining us. And yeah, be careful with those weird ETFs that aren't anything to do with Bitcoin, in my opinion. Those whatever they are. You've got Bitcoin ETFs now if you want Bitcoin. The weird Bitcoin companies, not my preference. All right, good luck, everyone. Bye for now. Mitch says, Tom, will there be any mid-year sale in May? Mid-year sale on stocks? Generally, you should get a first quarter sale if we want a March sale, man. February, March, please. Come on, we need sale for everybody. Everyone needs to get their sweet Nvidia at $400. Let's hope. All right, everyone. Stay safe, keep going. And remember also, if you're feeling FOMO a lot and you're trading, maybe it's good to have a little portfolio on the side where you can have your favorite stocks and trade stuff that you have absolutely no opinion on. Remember, if you have a bias, you're probably not going to win. All right, that's in trading anyway. In investing, bias can be okay. All right, catch you everyone. Bye for now. See ya. That could be true, Kevin, by the way. No, I think his first word other than mum or dad has been duck. I'm literally serious. Maybe it means like duck for cover. All right, catch everyone. Bye for now.